Welcome back to Valareso Capital. On today's video, we're going to go through the market update. We're going to take a look at the four main indexes, and then we're going to take a look at some of the secondary indicators that I tend to watch to find more clues about the path of least resistance for next week in the market. It has been a crazy market in the last couple of sessions, and it's very important for us to remember that even though that we're selling, the selling has accelerated to the downside, we have to be aware that at any point these snapback rallies, these oversold rallies can be very strong. So we want to be aware of the levels of support and the possible levels of resistance. If you're interested in this information, make sure to stick all the way to the end of this video. Before we continue with the video, remember guys that this video is for informational purposes only, is based just on my personal opinion and is not financial advice. I hope that you're having an amazing weekend, and let's jump into this video. And remember guys that if at any point of this video you find some of this information valuable, make sure to subscribe to the channel. That way we can reach a larger audience and help more traders in their journey. So let's start here. We're gonna start with the SPY. And what is interesting is that we were talking about, if we go back to last week's video, we were talking about the path of least resistance continue to be to the downside, but we were talking about the possibility of support in the market right here. And let me just grab my drawing tools right here at this 50 daily moving average, right? We were talking that perhaps the path of least resistance was down, but probably we're gonna see a little bit of a bounce in the market before the continuation to the downside. Remember that we were talking, guys, about these gaps in the market. We were talking more about the gap in the QQQ, referring that sellers were still in control of the price. So very important action. Remember that when we have gaps open that are unable to close, that signals a lot of strength or weakness in the market. So right now the question is, what is going to be the path of least resistance for the market next week? So of course, right now the trend is down. We can clearly see that the moving averages were trending up. Now the moving averages are trending down, which is actually a pretty easy way to understand what is the path of least resistance. The path of least resistance continues to be to the downside. Now, it's very important for us to understand that we are starting to be pretty oversold to the downside, right? You can see right here in my indicator, it's pretty rare that the lower bottom of the indicator gets all the way to 30. That means that we are pretty oversold in terms of momentum, and we tend to see those snapback rallies. Now let's take a look at the secondary indicators that I was mentioning, right? A lot of people watch this. I have found them to be really strong, to be honest. Right here, I have the 5-day average and I have the 20-day average. This is the percent of stocks that are above those moving averages, right? The 5-day average above, the 20-day average below. You can see right here that we were pretty oversold. We continue to be pretty oversold in terms of these indicators. So I do expect some kind of bounce in this market. Right here, I have the put call ratio. Now the put call ratio is a little bit tricky. I tend to watch for closes that are near this 1.20 level, basically above 1. You can see that we already have one close right here. And if we just go back, and this is something that I was watching another trading talking about, his name is Henry Gamble. He was mentioning right this close right here, this was on the 17, and if we just jump, this was to say again, this was January 17, 2024. If we go back in the chart, you can see that that day was right here, but of course the trend was different, price was above the moving averages, and then of course the context is a little bit different. Now we did have a close on the 17. We go back in price is right here, but you can see that the price continues to go down. Now what is really interesting I want to show you is that this is the price of the SPY. Remember that the SPY is highly weighted on the mega cap stocks. If we jump pretty quickly to the RSP, which is the equal weighted for the S&P, you can see right now that these actually did kind of bottom on the 17, and that the price action is very different from what we're seeing in the SPY. So I do think that we have to pay attention here. You can see that right here, that momentum is starting to curl to the upside. Now, of course, as long as my momentum is below that midline, I'm expecting rallies to move in averages to be sold. So that's very important. That's a very important restriction. That's a very important the extension. So you can see right here that we have this base. And now what is really interesting about this base is, in my idea, is that if we happen to close above this base, most likely we're going to come all the way back here into this 21 exponential moving average. I do think that that's going to be a really important level of resistance in the equal weighted. And then perhaps we, of course, are going to see some kind of rally in the SPY. I do think that perhaps this level right here is going to be pretty strong resistance, right? We have to take a look at the moving averages. Of course, anything can happen, but I don't want to short this market when we are down here, very extended from the 8 exponential, which is this black moving average right here. So that's going to be it for the SPY. You can see that we are pretty oversold, and we are starting to see divergences between the equal weighted and the SPY. So that's very, very important to take into consideration. So let's take a look at the other indexes. We're going to jump pretty quickly into the Qs, the DIA, and the IWM. I do think that most of the information it's going to be in the SPY. So let's take a quick look here at the Qs. A pretty amazing move, right? We remember that we were talking about this gap. We break below this gap. We also happened to break below this trend line that we had. We broke below support. Remember, guys, that we were talking about that 50 daily moving average as being the line in the sand for the Qs. We broke it, and then you can see that basically we sold off for the entire week. I was not expecting this kind of weakness, especially on Thursday and on Friday, right? I was expecting this gap to hold. I was actually looking for this gap to hold and then perhaps seeing a little bit of a bounce and then a continuation to the downside. That was my perfect scenario, because I was able to short near this gap right here. I was able to take profits around this doji candle here, but then of course I didn't participate in the continuation to the downside. But that tends to happen. Sometimes the market just moves pretty quickly, and that's okay. So now the question is, where is the Qs, right? You can see right here that the Qs, I do think that this is going to be important support. You can see that this is the base for the start of the year before we had this advance to the upside. So we basically gave all of that move back. I do think that we're going to see a little bit of chop here. I don't want to rule out the possibility of more downside, but we are pretty extended. You can also see right here in my momentum indicator that momentum is pretty extended to the downside. So I do think that this is not the place to short, but rather wait to see if we happen to get more patterns before a continuation to the downside, or who knows, perhaps a turn. But right now everything is pointing that the path of least resistance continues to be down. Now let's take a look at the Dow. I am watching the Dow. You can see right here that this is starting to look a little bit as a little bit of a base that wants to turn here. Of course, the path of least resistance continues to be down, but I wouldn't be surprised if the Dow happens to rally and it comes into this declining 21 exponential moving average. I do think that that's going to be important resistance. Perhaps we rally a little bit further into this gap resistance before a rejection. I don't know if the Dow is going to continue to the downside, but I do think that this level right here is going to be a really nice level to grab some short exposure and then see what the market gives you if it wants to retrace a little bit. And then finally, the IWM. IWM, kind of the same thing. We haven't been talking about the IWM lately here in the channel, but I do think that is pretty important. You can see right here that we got below that 50, we got rejected, and then of course you can see right here that the price has continued to be to the downside. Now I am watching the IWM for a possible short, but of course I don't want to short it here. I do think that probably we're going to see a little bit of a reversal. I do have a level. This is going to be the Fibonacci 0618 retracement, which is the very popular Fibonacci retracement. I measure it from this high right here all the way to this low right here. And what is interesting is that we also have the 21 exponential. So if we happen to see a really strong rally, these rallies, when we are pretty oversold, tend to be really quick. They tend to happen in 1 or 2 days. But I do think that this is going to be a pretty interesting level to start some short exposure. And then who knows, perhaps we're going to continue to go to the downside to meet this 200 daily moving average, or perhaps we're going to start a basing process right here. But I do think that you can try to get a trade right here at this 21 for some rejection action. So that's basically what is going to be for the video, guys. I do like to take a look at the UVXY. This pattern in the UVXY, and remember guys that we were talking about this, remember that we were mentioning the change in character when we happen to close above this 50 daily moving average. And remember that we were talking about the possibility of this being a pattern, and you can see the result, right? So what is actually interesting, and I'm gonna close the video with this, is that remember the price action of the Qs and the SPY. You can see right here that the UVXY basically stay below this high that it made on Monday. So this is telling me that we're seeing a little bit of a divergence here with volatility and also with the price action of the Qs. So I wouldn't be surprised if volatility happens to pull back a little bit here, perhaps retesting this gap that we have open, retesting this level of demand. And then perhaps we're going to see a little bit, we're going to see another leg to the downside, another continuation. But for now, I do think that we're probably in an important level of support overall in the market. So that's going to be it for the video, guys. Thank you so much for your time. I hope that you have an amazing weekend, and I will see you in future videos. Take care and bye-bye.